Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 29th, 2025, and we're diving into Boeing's second quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Boeing's latest financial performance.
Let's get started with an overview of Boeing's Q2 2025 earnings report. What are the key highlights?
Boeing reported a revenue increase to $22.7 billion, primarily driven by 150 commercial deliveries. However, they posted a GAAP loss per share of 92 cents and a core loss per share of 124. The company also reported an operating cash flow of $0.2 billion.
Revenue and profitability overview. Let's start with the top line. Boeing reported a revenue of $22.7 billion for the second quarter of 2025, which is a significant increase from last year. John, can you shed some light on this?
Absolutely. The revenue increase is primarily due to the higher volume of commercial deliveries, with 150 airplanes delivered in the quarter. This reflects Boeing's improved operational performance and the stabilization of their production rates, particularly for the 737 and 787 programs.
Despite the revenue growth, Boeing reported a GAAP loss per share of 92 cents and a core loss per share of $1.24. How does this compare to analyst expectations?
Analysts were forecasting an EPS of $1.54, so Boeing's core loss per share of $1.24 actually beat expectations. This indicates that while the company is still facing challenges, they are making progress in reducing losses.
Operational efficiencies and future outlook. John, let's talk about Boeing's operational efficiencies and future outlook. The company reported an operating cash flow of $0.2 billion. What does this tell us about their operational performance?
The positive operating cash flow reflects Boeing's efforts to improve operational efficiencies and manage working capital effectively. Despite the challenges, they are stabilizing their operations and focusing on delivering higher quality products.
Boeing's backlog grew to $619 billion. How significant is this for their future prospects?
The backlog is a strong indicator of future revenue potential. With over 5,900 commercial airplanes in the backlog, Boeing has a solid foundation for future growth. This also reflects the demand for their aircraft and the trust customers have in their products.
CEO Kelly Ortberg mentioned a focus on safety and quality. How does this align with Boeing's recovery strategy?
Focusing on safety and quality is crucial for Boeing's recovery. By stabilizing operations and delivering high-quality airplanes, they aim to restore trust with customers and stakeholders, which is essential for long-term success.
Segment performance and strategic initiatives. Let's delve into Boeing's segment performance. How did the commercial airplanes segment fare this quarter?
The commercial airplanes segment reported a revenue of $10.9 billion, driven by higher deliveries. The 737 program increased its production rate to 38 per month, which is a positive sign of recovery and stability in their production capabilities.
What about the defense, space, and security segment?
This segment reported a revenue of $6.6 billion with an operating margin of 1.7%. The segment's performance is stabilizing, and they secured significant contracts, including an award from the U.S. Air Force for T-7A Red Hawk aircraft.
And how did Global Services perform?
Global Services reported a revenue of $5.3 billion with an impressive operating margin of 19.9%. This reflects favorable performance and a strong mix of services, including securing a contract for P-8A aircraft training systems for the Republic of Korea Navy.
Financial position and risk management. John, let's discuss Boeing's financial position. They reported cash and investments totaling $23 billion. How does this position them financially?
Boeing's cash and investments provide a solid liquidity position, allowing them to manage debt repayments and invest in strategic initiatives. Their access to $10.0 billion in undrawn credit facilities further strengthens their financial flexibility.
With a debt of $53.3 billion, how is Boeing managing its financial risks?
Boeing is actively managing its debt by repaying maturing obligations and maintaining access to credit facilities. They are also focused on improving cash flow through operational efficiencies and strategic cost management.
What are the key risks Boeing faces in the current environment?
Boeing operates in a dynamic global environment with risks such as regulatory changes, supply chain dependencies, and geopolitical factors. They are addressing these risks by focusing on operational stability and strategic partnerships.
Key takeaways. As we wrap up, let's summarize Boeing's performance this quarter. Despite challenges, they reported a revenue of $22.7 billion and a core loss per share of 124 cents, beating analyst expectations. Their backlog of $619 billion and positive operating cash flow are promising signs for the future.
Indeed, Boeing is making progress in stabilizing operations and improving financial performance. Their focus on safety, quality, and strategic initiatives positions them well for recovery and growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Boeing's performance in the comments below.